Welcome back, good people. Good to have everybody in and listening and joining in with us as always. We have another special Platinum guest series in the house with somebody who's not new to this. He's been with us once or twice before, but as always, we appreciate whenever he comes with us. I want to welcome back to the Family Bloodline Network Platinum guest series, Desmond R. Perkins.
Yeah. What's going on, man? Appreciate you for having me.
Absolutely, absolutely. It's always my pleasure, man. I'm happy to have you on. You're always progressive. You're always doing something. You've always got movement and direction to you, and I absolutely appreciate that.
Thank you.
Yeah. So we are going to look at your new endeavor, as it were. And before I jump in there, I just want to start reading a little bit about you and share and remind our viewers who you are, what you've done, and get acquainted once again with everyone who's going to come across this information. So right now we are looking at your actual website, and I will have your information scrolling through, so anyone who needs to reach out and get in touch with you is able to. So with 28 years of honorable military service, you have built a career on values and integrity, discipline, and unwavering commitment to the people that you serve. Today, you bring those same principles to work as a loan officer, helping clients navigate the mortgage process with clarity, confidence, and respect. For nearly a decade, 10 years, my man, for nearly a decade, you've specialized in VA home loans, guiding veterans, active duty service members, and military family members through the unique benefits they've earned. Your experience isn't just professional, it's personal. And I can understand that. And I appreciate that. You say, I have an understanding. You understand the challenges and transitions that come with military life. And you're committed to making home ownership accessible, achievable, and stress-free to those who have served. You're also proud to be affiliated with several academic honor societies. Okay, come on now. Including Salute Veterans National Honor Society. All right. Come on, Tri Alpha First Generation Honor Society. Oh, and then of course we cannot leave out Omega Nu Lambda. Can't leave that out for all of those out there who needed to know. Not to mention that you are a traveling man and on the level.
That's correct.
Yeah, cannot leave that out either. These memberships reflected your dedication and excellence to lifelong learning and service beyond the uniform. Your approach is simple. Communicate clearly, which I couldn't get out for a second. Act with integrity and treat every client like family. Whether you're a first-time home buyer exploring refinancing options or using your VA benefits for the first time, you are here to guide all of our brothers and sisters in arms, currently or past, to every step of the way. When you're not working with clients, you often find him reading, writing poetry, or traveling pursuits that keep him grounded, curious, and connected to the world around him. Let me tell y'all something about my brother Dez over here. When he's saying these things, he is not. Don't take him half-heartedly. This brother spits from the soul. I was just talking to him a second ago, and I had to remind myself of who I was talking to. This is wordsmith. That's the wordsmith I'm talking to.
The wordsmith.
Yeah. I want to make sure I put that out there, as well as an avid reader and an avid traveler. You ain't new to the game of traveling. You've been multiple different places, and I ain't been able to hop on with you yet, but hey, bro, I'm coming.
Hey, but you got to come with me for the 50th.
I'm pushing forward on that. Absolutely.
Yeah, you got to come with me for the 50th, because the 50th is gonna be crazy.
Yeah, it is. And you are curious and connected to the world around you. And so I'll stop there. I'll scroll through your page real quick, just so people can understand what it's going to look like in the future whenever they come across you, who you are, and what you do. Right? Because I don't want any of the information that you're going to share to be lost to any of our listeners who will be following up more than likely with you for questions and to push forward into home ownership. So with that being said, and we just read a fantastic layout, but explain to us in layman terms what all of this actually means for the common person or for our brothers and sisters in arms, past, present, and future.
So what I would say, or what I would start off with, is this: a lot of people are intimidated by the home buying process. Part of my function is to make that as easy as possible. Having served 28 years in the military, what I will tell you is I knew nothing about my VA benefit. It's not talked about enough. It's not shared enough. They're just now beginning to get to a point where they're starting to scratch the surface. But when I tell you, I've served Iraq, Syria, Germany, 2 tours to Africa.
Yeah.
You name a place, I've probably been there. I've been to every yellow ribbon and post and pre-deployment. And they're not talking about it. And so, I want to get the information out. And that's no knock on yellow ribbon or, the armed forces or anything like that. It's the truth. They're just not putting the information out enough. When I have a colonel on the phone talking to me about his VA benefit, and he's telling me that he wants to hurry up and use it before he gets out so he doesn't lose it. And I'm like, well, what do you mean, sir? Like, are you involved in a scandal or something? Are you not going to get an honorable discharge? Because at this point, like, you can use it now. You don't have to wait. And so people just need to be educated. That's all. And so, so again, my job is to try to make the process as easy and as seamless as possible. So.
Okay. So with that being said, let's get a little more background about that. So you've done VA home loans for a while, right? So talk to us a little bit about your experience and navigate in that process, how long you did it and what you've learned from it, and what people can expect from you whenever they reach out to you and they have these questions.
Okay. So let's see, where do I start with that? Because I have used my VA loan myself, and it's a very straightforward process. I would say, whether you work with me or whether you work with someone else, I would say follow their instructions to the letter and do not deviate. There's always going to be that person that says, "Oh, well, my buddy got this," or "Well, my buddy got that." You are not your buddy. You are not your buddy. You are not your buddy. Like you may have a different credit score than your buddy. You may have a different DTI than your buddy. DTI is your debt to income ratio. You have a whole different credit profile. You guys probably earn, different money. You guys probably have different expenses. There's a whole litany of just different things that one person may have to deal with that the other may not. What I have noticed is that at times the VA loan is shunned when you're out there trying to make offers. And that's more of an issue that you would work out with, the realtor. But some people kind of shy away from accepting the VA loan because they feel like it's more stringent. And to that, I would say, it should be. It should be more stringent. You want checks and balances for a home that you're about to spend hundreds of thousands of dollars on. So, yeah, it should be a little stringent. It shouldn't be hard, but, it should be a little stringent.
Yeah. So how long have you worked with the VA specifically home loan process? And then how long have you, or if you serviced the regular loan process for regular civilians as well?
Absolutely. So nearly a decade working with VA loans. And just to be clear, not affiliated with the VA whatsoever. So anytime you deal with a VA loan, it's not the VA lending money. The VA does not lend money.
Huh.
The VA simply guarantees your loan. So when you obtain a VA home loan, you're dealing with a private for-profit entity. You're dealing with a private for-profit company. And so what the VA does is they basically back your loan. The VA lets us know that, yes, this veteran is eligible for this particular benefit, and that's it. So the VA does not lend money. The VA is not affiliated with any mortgage entity whatsoever. As far as civilians, I work with civilians as well. We have conventional loans, FHA loans, USDA, DSCR loans if you're an investor, construction loans. So I just particularly specialize in the VA loan because I've been doing that for so long at this point. But I'm able to help civilians as well, and I'll deliver the same service to them also.
Okay. So what is the difference between when you working with VA home loans versus an actual civilian home loan? What do you see as the biggest difference or the biggest hurdle or the easiest? Which one is easier for you to get through and actually help the person out with?
It just kind of depends, because with a VA loan, it's no money down on a VA loan. Now, no money down doesn't mean, no cost. There are costs involved, because you still have inspections and appraisals and, things of that nature. But as far as a traditional down payment, with the VA loan, you don't have to worry about that. If we're looking at FHA, we're looking at 3.5% down. Conventional, we're looking at 3% down. But the rules change if it's a second home. If you've used conventional financing before, you're looking at anything from 5 to 10% down. FHA, you can only have one loan out at a time on FHA. You can't use it for a second home. If you're looking at investment properties, then you're looking at 20% down, or more. And so that's the difference between that and the VA loan. Typically, you need to have not financing, but additional funds in place, because in addition to closing cost, you have your down payments. You have your down payment, and then you also have whatever expenses are going to come in between that. So you still have your appraisal, you still have any additional inspections that you may have to get, to include past inspections depending on your state, which varies from state to state. So things of that nature is where they differ. Also, conventional loans have what's called PMI, private mortgage insurance. VA loans do not have private mortgage insurance. And so one thing to note is, on a conventional loan, if you put down 20%, then you don't have to get PMI, which, like I said, is private mortgage insurance. That's an additional insurance that's on top of your regular homeowner's insurance. It's usually a couple $100 a month, just depending, but the VA loan doesn't have PMI at all. So, and also you can put down money on a VA loan. I don't typically recommend it. Like if you're looking at 3% down, for example, like you would on a conventional, usually I would just tell the person, hey, let's save that money for your move, or let's save that money for your closing cost, or maybe you want to get a security system, or something like that. Let's find a better use for that money, because what you'll find is, depending on how much you're putting down, it may not be worth it on the VA loan. And that's when I kind of run those numbers to determine if it's a good fit for you or not.
Yeah. And so, not necessarily meaning or making you specialize in VA home loans. It's just an added service that you provide, I'm guessing.
That's correct. Okay.
All right. I just wanted to clear that up. So for anybody that's listening, it's not that he doesn't deal with conventional loans for the general public. He just also has an additional skill identifier, as we used to call it.
Oh, hey, man, listen, woo, skill identifier. You better cut it out, man. We retired, man. Don't do that.
Yeah. That helps him assist. Yeah, absolutely. Hey, you earned it. You qualified for that title, man. Because not everybody knows how to do that.
Yeah, but on a more serious note, like the products that we offer, like I said, it's VA, of course, conventional FHA. We do HELOCs, we do reverse mortgages, USDA loans, we do FHA rehab loans. Like, yeah, so there's a plethora of that's that wordsmith. There's a plethora there's a plethora of products that we offer that that can fit any niche or anything that you may be interested in. Everything from the first time home buyer to the seasoned investor, we have something that'll fit your needs.
Yeah, and so you touched on something a second ago that I want to mention or go back to real quick, and that's being able to use your VA home loan multiple different times.
Absolutely.
So can you lead us through that a little bit?
Yeah, okay. So well, let me pose a question to you.
Yeah.
How many years did you serve?
27.
Okay, you did 27. And what was I know we were in California together.
Yep.
And let's say, for example, while you were in California, you used your VA home loan. Okay. And so now, Mr. Glass is in his home in California, sunny California, and now it's time to PCS. Okay. Now you left Cali and went to Kentucky, right?
Yeah. Back in 2023. Yeah.
Okay. So you got a couple options. You can sell that home, and as you PCS, you can pick up and use your VA benefit again, because you can use it over and over again. So you can use it in that manner. Or what you can do is you can rent this home out, use it as a rental property. And as you move forward to, your PCS location, you can go on what's called a second tier entitlement. Okay. And so essentially the way that works is we look to see not the amount of the home, but how much entitlement has been used. This is something that we look at on your certificate of eligibility. Your certificate of eligibility is a document that substantiates that you have eligibility to use the VA loan. Okay. And so we look at the numbers that are on your certificate of eligibility and we plug it into a system that lets us know how much we can lend you without you having to make a down payment, because essentially the VA loan is set up for no down payment. But the rules are a little different on a second tier entitlement. And so let's say, for example, you're in Kentucky and you say, well, Des, I want to use my VA loan again, and we say, okay, so we look at your entitlement. And I say, well, Mr. Glass, based off of, the current use of your entitlement, we can lend you $300,000 is our max that we can lend you. Okay. And then you say to me, well, Des, I found this home it's 310. Like, what does that mean? Does this mean I can't get the house? And so what happens when there's an overage is you're not responsible for the overage, all that overage in this situation. You're responsible for 25% of the overage, not the entire amount, but the overage. So in this example, you're over by 10K of what we were able to lend. So in that situation, 25% of 10K is $2,500. So you would be responsible for bringing $2,500 to the table for a down payment. Now, on that second tier entitlement, if you do not exceed the amount that we're able to lend, then there's no down payment.
Really?
Now, here's the other caveat, and I want to make sure that I don't leave this out. On a second tier entitlement, the home has to be over $144,000. Now, that's a VA guideline. That has nothing to do with your lender. That's something that the VA has put in place, and if it's under that 144 mark, then you have to look at a different entity.
Okay.
Now, if you were to sell that first place, you're back on a first tier entitlement and you start over, and there's no down payment and there's no cap. It's based off of whatever your income and your DTI can support.
Got it. So explain a little bit between the difference of where you were previously and your progress to a mortgage loan originator. What's the difference between the two, and is there any difference at all, right? And what should a person expect when dealing with a person who has an MLO number like yourself versus a traditional broker?
Okay. And so I actually work for and as a broker at this point. Earlier in my career, I only worked as a MLO, which is a mortgage loan officer or a mortgage loan originator. I would originate the loan. Previously in my career, I was only able to offer what we had. So case in point, that was the VA loan, VA loan, FHA, conventional, USDA, and refinances and things of that nature. But that was the extent of it. And whatever our rate was for the day, that was our rate, and that was it. So if you were to call in and you say, "Hey, what are rates looking like?" I can say, "Hey, well, today rates are at a 6.75." Pretty standard, pretty straightforward. That's the end of the conversation. As a broker, we work with a multitude of lenders. And so now when you call and you say, "Hey, what's the rate?" As a broker and mortgage loan officer, I can shop around to get you the best rate. So it's not a matter of me saying, "Hey, this is our rate for the day, and that's all I have to offer." Now it's based off of your situation. The previous company that I worked for, you needed a 620 or better in order to qualify for a home. Well, because that's their rate and that's their criteria, and that's it. And so there's a lot of confusion, when people will say, "Well, there's no minimum score for a VA loan," and there's not. But remember, the VA doesn't lend money. So it's up to each lender to decide, what their threshold is with regards to what the credit score can be. But I work with lenders that'll take a 560, a 580, on your credit score, and they can still find you something. I had a I had a young lady, I can't mention her name, but I had a young lady that was going FHA, and her credit score was a 519. And so at my old place of employment, I wouldn't have been able to do anything for her. And FHA is 3.5% down. But the score was her DTI was good. She had solid income, but she had some collections, on her credit profile. But I found a lender that was willing to take her on. And so the caveat was, "Hey, we can do it, but she has to put 10% down."
Oh, wow.
And so they were willing to work with that 519 credit score, but she just didn't have the funds to do it. And so now, I've used one of my resources to help her, with her credit. So now they're working on her credit. And once that score gets up there, a little bit, then, we're going to, as the youngsters say, spin the block.
Yeah.
We're going to spin the block on her and try to get her situated.
Okay. So this position that you're in now as a mortgage loan originator or broker, a mortgage broker, this gives you more flexibility and leeway to actually assist your customer base right now.
So much more.
Yeah.
So much more. My boss, Jacob Garrett, he's been a phenomenal mentor for me. And one of the things that he said to me was, "You're going to be able to say yes a whole lot more."
Oh, man.
At my last place of employment, I had to say no a lot just because of what I was bound to from a compliance standpoint, and based off of the realm of services that we provided. But now it's or it was, "I'm sorry, we don't do that." But here it's just like, hey, let me look into that and get back with you. I'm sure we can do it.
Yeah.
Or it's absolutely we can do that. Or your score is 550. Oh, that's good enough. We'll find you something. And so I'm in a position now to where I can say yes a lot more. I can offer a lot more. I can do a lot more, so I can help more people. So that's the exciting part, about the job.
Yeah. So you touched on credit score, and there are what you called keys to the keys you hold in mortgage processing, and you outlined credit score, budget, saving habits, readiness to act. Touch on those for us a little bit, as if let's act as if I was a customer coming to you,
Okay.
and you didn't know me from Adam, and I said, hey, I see this house, it's roughly 250. I want to get it. We can go both me using a VA home loan or just a conventional, either way, right? Because I think looking at both would be an interesting viewpoint of it all. But outline using or how each one of these fit into that credit score, budget, saving habits, and readiness to act.
So from a credit perspective, okay. Credit is just people often overcomplicate credit, and it's a tool that you have to kind of manipulate. And I know if you don't understand credit, it can be difficult. And also credit can be intimidating. A lot of times people say, well, I have a lot of debt. I want to pay some debt off. I want to pay my credit cards off first before I make a move, And a lot of times you don't have to do that necessarily. A lot of times you just simply have to pay debt down, not necessarily off. And oddly enough, sometimes paying things off can actually hurt you in some situations. I would say the important thing regarding credit is to use, if you're able to, because everybody has a different life circumstance and situation. But if you're able to, try to use no more than 30% of your available credit. So for example, if you have a card with a credit limit of $3,000, try to use no more than 1,000, of your credit reserves. And your credit is going to help dictate your debt to income ratio, because these are the debts that you have versus your income. And there are different guidelines for different programs. So VA, off the top of my head, you can go over, 50% on VA, but conventional, you can't. No more than 50% debt to income ratio on a conventional loan, but VA, you can't. And there's other rules, other nuances in there once you, go over that particular threshold with VA. And they're called compensating factors, which compensating factors are just additional items on your file that make the file stronger. So one compensating factor may be that you have 6 months of savings reserves in your bank account. That could be considered a compensating factor. Having or moving, when you move into your home, your projected mortgage is less than the current rent that you're paying. That can be considered a compensating factor. And that's also a strong one because it shows that, hey, I've been responsible for making this type of payment before, and now I'm going to be paying less. So like when underwriters look at things like that, when they're looking at your file, it weighs heavily in your favor, and then, but yeah, so those are from a credit standpoint, those are the two things that you have to consider is, getting your credit in check. And again, that doesn't necessarily mean paying things off, but maybe paying things down. And because that credit is going to weigh against your debt to income ratio. And so that's important because you can have good credit and still have your DTI and it not be in compliance, and that can stop you from getting home. And what I tell people is, people overcomplicate the process, and it's really like once you're in it and it's very easy. It's very easy. So typically, when you rent, most rental places want you to have 1.5. They want you to earn 1.5 to 2 times the amount of rent.
Yeah,
your rent. That's DTI. That's literally debt to income. And so you're already doing the things that are necessary to be a homeowner. You already budget every month. When you get your check, you say, okay, well, I have to pay rent, I have to pay gas, I have to pay car note. You're already budgeting. You're already doing it. You just don't realize you're doing the same things that homeowners are doing. The difference is, that place is not yours.
Yeah.
And when you rent, for people that are always worried about the rate, well, like when you rent, your interest rate is 100%.
I never thought about that. Yeah.
I mean, when you rent, your interest rate is 100%. So, I mean, you do with that information what you will, but but yeah, what was the other question?
Budgeting, saving habits, readiness to act. How are they contributing factors into where you are, what you're going to explore with
so we covered credit and budgeting, and so the readiness to act is really up to the borrower. I would say once you have those things in line, everyone's going to have their wish list, for what they want in a home. And I see it all the time. But I will say, I'm not going to say that you shouldn't have what you want. Everyone should have what they want. You get up and, you work every day, you work hard for the money that you earn. And, if you want all the bells and whistles, who am I to tell you not to have that? However, you should manage your expectations just a little bit. If you make $60,000 a year, you probably shouldn't look at a home that's $450,000. It's probably not ideal. Unless you bought during COVID when rates were like 2%, then maybe.
Right.
I would say decide what's important to you. For me, I have to have a garage. I just have to. And so what that would mean for me is maybe no condos, because most condos have carports, and for me, I want a garage. So for me, if I know I want a garage, that takes condos off the list. If I'm a person that knows I want a specific amount of acreage, then maybe I need to look at buying land and doing a construction loan, and having my home built, unless there's already a home on an existing piece of land with the amount of acreage that I already want. Now, if you just want some acreage, then you could probably find that. But if there's an oddly specific amount, I want 12.5 acres. If it's oddly specific, then maybe you go out and find that piece of land first and then build on it, which we do construction loans as well. And so that's the determining factor, for the readiness piece is, once you do that, figuring out what it is that you absolutely want. And then you get with someone like me and we come up with a plan and timeline and, things of that nature.
So that moves into the whole readiness to act aspect of things, right? So what, and I don't know if you know this off the top of your head or not, because I keep getting hit up by different companies asking, hey, what's your rate at right now? And not just what your rate is right now, but we can do this, we can do that to lower your rate, which I'm not opposed to, because look, if I can get from where I am now and it slide left, that meter slide left, because I got my house when interest rates were still somewhat high. And I negotiated down once, and I'm looking to do it again, right? Where are we at roughly? And I know it's going to vary.
You froze for a second.
What should people be looking at?
You froze for a second.
Okay, how about? Got me back.
Okay.
All right. All right. So what should people be looking at for uh, uh the rates right now? Are we still in the sixes or
Um,
to
so
the mid?
rates typically depend on two things, right?
Okay.
It's going to depend on market conditions, which we have no control over, and your credit score, which you do have control over. So those are really the two things. Purchase rates are going to be different than refinance rates. Speaking on your situation, you'd be looking at a refinance, or in your situation, an EARL, interest rate reduction loan.
Right.
I know for purchases, if you are a 640 credit score, you're probably looking at around, we're in the sixes, I can tell you that. But a lot of times rates change by day and even sometimes by hour, so it's kind of hard.
Yeah.
And then, for me, that's where that whole file structure comes into play, because I have to look at your file and then go through my lenders to see who's the best suited for you and who's going to have the best rate. And I can look at there's a system that I go in and I look and I can see, and I can make the comparison. I can say, okay, well, maybe let's say, okay, let's do this. I know that you're a veteran, and let's say, you come and you say, well, I know I don't have to put any money down, but I want to. And I say, okay, well, how much are you looking to put down? You say, about $10,000 or whatever, 15,000, 20, whatever the number is. And so now that changes things, because when I'm looking through this system and I know now that you're putting money down, maybe it's more advantageous for you to go conventional instead of VA, because you are putting money.
Oh, wow.
Because maybe they have a better rate than VA. It's not often that conventional rates beat VA, but for the sake of the example, or maybe FHA,
Yeah.
And so, because the thing that I have to look at is, okay, if he goes VA, it's 0 down. If he goes conventional, we can go with the 3% down. VA is 7%. Bless you. VA is 7%. Maybe conventional is 5, or maybe it's 6.5. It's a whole 1.5 difference. So now when I look at that and I say, okay, well, it's a 1.5 difference, and he's going to have to get PMI. But even with that versus where that rate is, this is going to save him $150 a month, And so now it becomes, I don't care who you are, $150 is $150.
Yeah, that's what, $1,600 a year.
Listen, like,
That's
I just filled up Naomi. That's my Jag. I just filled up Naomi for $79.13.
Man, you using that premium.
This is true.
Yeah.
But still, $79, man. So
wow.
So yeah, I can use the extra $150 around here.
Absolutely.
That's some groceries, that's a light bill, that's your streaming services, that's your insurance, so you can do a lot with $150, especially in these critical times.
Yeah.
But I'm saying all that to say that once you start digging into the process, it's not necessarily black and white, So now I have to kind of look and compare those numbers and say, hey, you can go VA, but if we do this, I can save you $150 a month, or if you want to stay with VA for whatever reason, there'll always be opportunities to refinance depending on what the market looks like.
Mm-hmm.
And to speak on the refinance piece, there has to be something called NTB, which is a net tangible benefit. And that is put in place to protect veterans. And so what has to happen is we either have to be able to, one, lower your monthly payment by $50 per month, or lower your APR by 0.5%. One of the two has to occur. Otherwise, it's not financially worth it, and by law, we're not able to do it. You know?
Wow.
And so, which is good because we don't want to, put you in a hole that you have to dig yourself out of.
Right.
So,
right.
And then typically, like let's say you purchased a home. What month this is? April. Let's say you close this month on a home. You would skip May's payment, and then your first payment will be June. So you have June, July, August, September, October, November, December. So after 7 months of on-time payments, keyword is on time, then you're eligible to refinance at that point.
Oh.
And you can essentially refinance every 7 months if you chose to, if it made sense to do so, because you still have to have that NTB, that net tangible benefit.
Okay, that does make sense to me now a lot more. So speaking of making sense, what do you think? Why do you think people are so hesitant to jump into the mortgage game?
Oh, I'm glad you asked that. I'll tell you, I know exactly why. People are afraid of the rates right now. People are waiting on rates to go down. And to me, and I say this 1000% without a bias, to me, that is a horrible idea. Horrible idea.
Why's that?
Well, okay. Let's say that you were rate conscious. Okay. And you say, well, I'm going to wait for rates to go down. Okay. Now, what do you think is going to happen when rates go down? Everybody is going to shop.
Yeah.
So now the house that you were interested in, that you and one other person was interested in, now there's 10 people interested in that house. What does that do to the house?
It's going to
price goes up.
Yeah.
Price goes up. And, in that type of situation, if 10 people are interested in a house and you're a person that needs help with closing costs from your seller, you're like, well, I got 9 other offers. I'm not paying your closing cost.
Oh, wow.
So no. But let's say there's 2 people that's interested in this house. It's been on the market for a while because no one wants to shop. You can say, well, hey, I'll pay your asking, but I need X amount in closing cost. They're a little more agreeable, to paying those closing costs, on your behalf, or at least some of them, And so here's the thing, I would, and I say this without a bias, because if you think about it, it makes sense. I would advise people to buy right now. Okay, yeah. Now, when rates go down and everybody else is shopping, that's when you refinance. You refinance. Because guess what? While you're in that apartment renting, paying 100%, I can guarantee that they're going to probably raise the price of your apartment every year when you. Oh yeah. Yeah. So you're already paying 100% anyway, and the thing of it is, your mortgage is not going to go up unless taxes or your insurance, something like that. But your mortgage is going to be a fixed entity for the most part.
Right. It's easy to predict what your mortgage is going to be.
It's real. And when you can predict something like that, that makes it easier to budget.
Yeah. Absolutely.
And here's something else too that I wanted to cover as well. A lot of people don't know this about. Some people know, but a lot of people don't know this about the VA loan. The VA covers up to 4 doors. And what I mean by that is, if you were to purchase a duplex, triplex, or a quad, as long as you live in one of the units, because it has to be your primary residence, as long as you live in one of the units, you can rent the other units out. So you have a built-in investment in that entity. You can, and guess what? That's going to, as a VA loan, it's 0 down, no down payment. And guess what? You live there for a period of time, you move, and then you do it again because you can use your second tier entitlement to buy another fourplex.
Now
You
that
live in one of them, and now you're getting rental income on 7 properties, and you're living in one. Now you're not even paying a mortgage for yourself at this point. You can do the same thing with an FHA loan. So
that's a great segue, actually, because I was going to ask you to give a brief description of the different type of loans that you look into, because you mentioned FHA, you mentioned the construction, and we talked about the VA a little bit at length, the conventional a little bit at length, compare and contrast, USDA, and HELOCs. So go through these for us. Give us some definitions to these terms that mortgage companies, brokers use that generally rock the average person on their heels, because that's not an everyday thing that we're used to, and it seems and it sounds like it's complicated stuff when for the layperson like myself when we are first introduced to this world.
Well, let's start with the HELOC. Okay, the HELOC is a home equity line of credit, just an acronym, home equity line of credit. Okay, and let's say you are someone that purchased a home during COVID, so you were able to take advantage of those 2% and 3% rates. And let's now assume that you come to me and you say, well, Des, I want to do a cash out refinance, because there's 2 types of refinances. You have an interest rate reduction loan, and then you have a cash out. A cash out is when you use, let's say you have some equity in the home. Let's say your home you bought at $300,000 and now it's worth $500,000. So you have $200,000 of equity. You want to do some things around the home, some home repairs, or you want to pay off debt. Whatever it is you want to do, you need to pull some cash out. Well, if you refinance, you're refinancing the whole loan. So that 2% that you have, you lose that, and you get whatever the current rate is. You get whatever the current rate is. You don't want to do that. So instead, you do a HELOC, home equity line of credit. Okay. And whatever the rates are for HELOC, let's say it's 7%. You're only paying 7% on the amount that you're borrowing, not the whole entire loan. So you still get to keep your 2% on the main portion of your mortgage, and you're paying 7% or whatever. I'm just throwing that number out there. Whatever the rate is for the $30,000 that you're pulling out to redo your floors in your basement or whatever it is. So that's how a HELOC works. Okay. FHA. The good thing about the FHA is it also has a limit of 55% on the DTI standpoint, and it's 3.5% down. The good thing about FHA, though, is it is a little more lenient for those less than perfect credit scores. It's a little bit more lenient. The example that I gave you earlier with the young lady that had a 519, there's not. The FHA typically creates opportunities where people otherwise may not be able to get them anywhere else.
So what does FHA stand for? I don't know why that's up there.
Federal Housing Administration.
Oh, okay.
Federal Housing Administration. I should have known that after. Hey, edit that out.
I got you. I got you, bro. You ain't even got to sweat it. I'm already on it.
Man, well, I'm supposed to know that, man. This weekend, I ain't thinking. But yeah, FHA, they essentially, like I said, they kind of provide and put in place opportunities for people with less than perfect credit. Oftentimes, and I'm just learning about this, oftentimes they have DPA programs, down payment assistance programs, that can be implemented, which I'm still, and they vary. You still have to have a certain credit score to receive the down payment assistance. Some of them are forgivable programs. Some of them act as grants. There's so many different ones. And so I'm going to ask you not to question me about that now because I don't
Oh,
have
no, not at all.
I don't have the documentation in front of me, and I'm still like literally learning about this particular program because
Yeah.
it wasn't something that we really did at my last place of employment. So,
Okay. So, and what about was it a construction, or better yet, the USDA?
USDA. Okay, so USDA is kind of a lot like the VA. It's a zero down loan, and it's usually reserved for loans that are in or properties that are in the more rural areas. So like you can't you can't use a USDA loan in Kinlock.
Got it. Yeah.
Yeah. Like in the inner city, you can't use a USDA loan. And a lot of times when we have to look up an address and put it in their website to see if it even qualifies for a USDA. I've only done 2 in my entire career. I don't do a whole lot of USDA loans. And it's not that they're any more difficult or anything. I just haven't had a lot of demand for it. Because usually it pretty much there's no PMI, there's no money down. So usually people just use their VA loan, and I had a young lady that couldn't use her VA loan because she didn't qualify. She didn't have enough service time, and she ended up and she said, well, it was out in the country, and she ended up switching to USDA and ended up working out for her. So that ended up working out pretty good.
So just a sidebar, as it were. What is the time? How long do you have to have served in order to use?
Okay, so let me think. If you are in the reserve or the National Guard, you have to have a minimum of 6 years. 6 years of service time. If you are reserve or guard and you have less than 6 years, but you have a deployment, Title 33, I want to say, then you're eligible. Active duty is eligible after 90 days of service, if I'm not mistaken. I have to double check that. Or maybe it may be 180. I'll double check that because I remember arguing. I said, well, and we'll just say for the sake of the conversation that it's 180 days for active duty. I remember arguing. I said, well, why would an active duty member have to wait 180 days, but a reservist is eligible after 90 days, boots on ground on a deployment? That doesn't make sense to me.
Yeah.
And so there was some nuance in there that I was trying to argue, and I can't remember the exact, but it's somewhere around in there. Typically, with active duty, I don't have any problems because let's just say it is 6 months. By the time they get in and they're ready, they send their stuff in. Like that time is gonna. I'm not saying it takes 6 months to it'll take 6 months to buy a house, but what I am saying is, someone that has joined the military and decided that they want a house, usually by the time they're ready, the amount of time that they need is already, elapsed. So
yeah, that's just like going to your next PCS station and you being in the state for 6 months, you can claim residency at that point, right? And so depending on the state you're going to, it might be worth it. If you go to Texas and you don't have any federal income taxes that you got to pay, or state taxes rather, depending on what you are as far as your veterans ratings, yada, 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 you won't have personal property tax, right? So it'll take about 6 months anyway in any type of capacity to claim residency in an area in order to take advantage of the benefits of being a veteran in that area, or even active duty in that area, if you want to, let's say, even get your license switched over to that state, right?
Well, but that's where, so that's where we make it easy though, because like, let's say you're moving to Texas next month. And I'll use you as an example. You're already retired, veteran, and you move to Texas next month. You don't have to wait that period before we can do something for you in Texas. Like we can get it cracking right away.
Oh wow.
We can make it happen. So it's not like you have to wait. And then as far as anyone that's receiving VA disability and you go to a state where you're at 100% and you have the tax waiver, what I would advise those people to do, if you are purchasing a home, go to the county tax assessors, because it's not by the state, it's by the county, because the county you pay taxes to the county, not the state. Go to your county, wherever the home is, whatever county that home is in that you're interested in. Let them know, say, hey, I'm going to be purchasing a home in this particular county, and I need to get my tax exemption set up. Easy peasy. Now, what may happen is, let's say you purchase in August, okay? You may be on the line for the taxes from August to December.
Sure.
And that'll be figured into your closing costs. But once January 1 hits, that's when your tax exemption, may kick in, But different states, different counties have different rules. So get with your county tax assessor where that's concerned.
Yeah, I know I need to do that. I gotta file for my trying to think of what it's called here in the
tax
state.
exemption?
It's a Homestead Act. I gotta go and check out my Homestead Act information and get that sent in, because it helps. It helps.
You gotta save that money, man.
right.
Stop playing.
Yeah, I gotta go get it. I gotta go get that. So,
Yeah.
All right. So, what about construction loans?
Okay, so construction loans. So construction loans are interesting, and I'm just learning about these too. So I'll give you a little bit, and at my previous place of employment, if you came to me and you said, well, I got some land, I want to get some land, and I want to build on it. This would have been my advice at my previous place of employment. I would say, Glass, you need to go to your local bank and get a land loan or a construction loan to acquire the land. That construction loan, then your builder can come in and they can begin building on the land. Once the home is 80, 90% complete, then we take that loan and we refinance it into a VA loan. Now it has to be 80 to 90% complete, because that's when the home is considered livable. And that's when the appraisal can be done, at that point for a build. That would have been the advice, at my previous place of employment. Now, as I understand it, with the construction loan, we can just do a construction loan. You don't have to go and get that separate loan and refinance it. There is a VA one-time close construction loan is what it's called, where you can include the land and the build, and in some situations, it's a interest-only loan until the build is complete, or you can have payments, what's the word, deferred until you move into the home, and so that's something I'm still learning about, because that's new for me. I'm used to doing it the other way.
Yeah.
And so we have so many things that we can do. Like, I forgot, we also do physician loans. Loans for doctors. And it's just like a VA loan. It's a no money down loan. And here's the thing, and I didn't mean to get off the subject, but here's the thing. You could be a resident. You don't even have to be working yet. You don't even have to be, you can be a resident, and we can get you approved based off of future income.
Wow.
And that's for dentists, doctors, veterinarians, pharmacists. Yes. A physician's loan. Hey, okay. I hit my niece up. I hit my niece up. She a pharmacist. She live in Texas. I said, hey, I said, when you get ready, I'll let your uncle when you get ready. I said, talk to your pops first, but holler at me when you're ready to buy a house. I was like, or a condo. I said, you might can, you it might be less than what you're paying in rent. So
yeah.
yeah.
So let's. I know we got things to do today, but this is an interesting topic because what is a good age that you recommend for parents to begin to steer their kids towards home ownership? And I'm doing that for mine now. The reason why I'm asking is because by the time our kids, my oldest is 16 and my youngest is 9, but by the time they are pushed out into the market, they might be screwed because of what we think, the lay person thinks as having these foreign countries coming in, buying up the market, not having available houses and all of that stuff. And I had somebody on a couple of weeks ago to where she does a lot of mentorship for kids. And so the question is, should we push our kids into home ownership as soon as possible, or is it better to delay that process a little bit?
I would say ASAP. Because if you think about when our parents or our parents bought homes, and you look at the price points between then and now.
Oh man, yeah.
They're not doing anything but going up. But I don't have a little one anymore. Well, my daughter's nickname, I call her little person. And she's still, my daughter's 25.
Right.
But if she had a sibling, what's the age gap between your daughters?
So 16 and 9. 16 my oldest. Yeah.
This would be my advice for siblings that are closer in age. I would do a FHA loan and a fourplex.
Oh, okay.
A fourplex. And me and my siblings would live in the one unit and rent the others out. And because that income is coming in, what I would say to my other siblings is, hey, save all your money. Save all your money. This is the strategy. And then you are going to go and get a fourplex, and then we're going to move in with you, and then we're going to rent out all 4 of these units. And I would do that with each sibling. Or you can go, if you can get land, go with a build, because you can tell a builder, hey, I only want a home that's 2,000 square feet. And, that may be a cheaper option because, you're building, it may be a little more because with the build, you're dealing with a certain level of customization, but you have control over how big the home is versus you finding a home that you like and it's 2,500 square feet and it's worth this, and they're selling it for, you can probably tell a builder what your budget is and they can build you something within that budget. And so that's the route that I would take with, with the little ones, with the little people.
Yeah, because they about to get on it. They don't know it, but they about to get on.
Unsuspected news on my daughter.
Hey, gee, they well, I want to make sure I set them up for success in the future. And unfortunately, and we can both speak to this. I got more days behind me when I probably got in front of me. So I want to make sure that by the time I expire, they have the necessary tools and they're equipped with the necessary tools and provisions to move forward and do all of this without me. So yeah, that's why I'm asking, because they finna get on it.
Yeah, absolutely.
They finna get on it. Absolutely. So is there anything else that you wanted to share with the audience, to talk about at length? It's up to you.
I would just say, the home buying process is not as difficult as a lot of people may think. Whether you work with me or anybody else, just ask questions. You don't know what you don't know. and you've been preparing for home ownership. It was just unbeknownst to you because, again, you know, when you pay rent, you're paying 100% APR. You know, that
Craziness.
same place that you're renting at, you know, they want you to earn 1.5 to 2 times the amount of rent. That's a literal example of debt to income ratio. So, and you already know how to budget. You budget your bills every month. So what I would suggest is just see what your buying power is. You know, a lot of people are always afraid because they say, well, what if I can't get the house? When what if I don't qualify? That's a good thing because now you know where you stand and now you know what you have to do. So that's why, and a no is temporary. A no is not forever. A no is just so not right now. It's not, no, you can never get a house. It's just, hey, we can't get a house for you right now, but if we do these things, this will be the outcome. We can pretty much measure what the outcome is going to be and lay out the path of what you need to do to get there. So, one foot in front of the other. Elephants are eating one bite at a time. You know, all the other cliches you want to throw in there, and that's pretty much it, man.
Man, that's super dope. I absolutely appreciate you giving us some game on this topic. A lot of people are afraid to jump out into the waters to even look for houses. Like it took my lady kind of, and then I was dealing with a pretty substantial issue at the time, but it took that to push me forward into becoming a homeowner and going process. And even when I was going through the process, you know, I was kind of like, I don't know what I'm doing. This somebody guide me, somebody lead me, and I don't care what this means. I don't know what that means. Is it going to cost me extra money? It's not going to cost me extra money. How long I got to just do this for, right? So
did your loan officer make it any easier for you?
Oh my God, yeah.
See, so that's what I'm saying. Like, you know, you get with somebody that is willing to work with you and explain. And again, I say, don't be afraid to ask questions because a lot of people do. Like, I was on the phone with a colonel that thought he was getting ready to get out of the military, and he thought he was going to lose his VA benefit because he hadn't used it. What? No, sir, that's not how that works. But you know, it always takes NCOs to.
There you go. Hey, say that.
You know, senior NCOs lead the way. That's what we do, baby. That's what we do. But no, it was kind of disheartening though because there's so many people that don't know about their benefit, and so one of the things that I've been doing is I've been contacting the different VFWs in the area, and I've been giving classes on their benefit and just first-time home buying stuff and stuff like that. So incidentally, I have another one coming up on the 26th or the 27th, whatever that Monday is, to go to the VFW to give a class. But ask questions, like just and I know it sounds cliche, but there's no such thing as a dumb question. Like you really don't know what you don't know, and so ask all those questions. Get answers. And what I tell people is, hey, if it doesn't make sense, because I do this every day. And so I may say something and it may make sense to me because I understand it. But if you don't get it, say, hey, I don't understand it. Then we'll figure out a way to make it make sense for you. We're doing so many things. We even got reverse mortgages for seniors, if that's something that they're interested in. So like we do everything. You do everything, if you're an investor, and I'm learning about this too. If you're an investor, DSCR loans, don't ask me what it stands for. DSCR loans are not based off of, your income. They're based off of their lending for a DSCR loan is granted based off of the income that the property can generate. So if there's a property, like it could be $1 million property, if that $1 million property, and let's say that the mortgage on $1 million property is, let's say you get it at 2%, so it's $2,000 or whatever, right? As long as the gap is I think it has to be 1.5 times the amount over the mortgage that it earns. then you can get that loan. It's not based off of your income. It's based off of what the property can generate. Now you still have to put 20 to 25% down, but if you're someone that's looking to do a build on land, you can use the land as collateral and not have to come out of pocket if you have the land. So me and you talk about that later.
Yeah, absolutely.
Got something.
That's
but there's so many different things. There's so many different avenues that you can take, because maybe you don't qualify for a VA loan, and that's okay. Let's look at conventional. Maybe you don't have the time, enough time in for VA. So now we look at conventional. Maybe you don't have the credit score for conventional. So now we look at FHA, and now we have to get this home that's a little lived in. It needs some work, because you have to get something that needs some work, because that's what you can afford. So now we look at an FHA rehab loan, and so that FHA rehab loan is going to include the funds that you need to do the renovation within the loan. So you're not coming out of pocket. It's figured into your mortgage, but that's just one more avenue that's available to you. Like, at this point, if you don't have a home, it's because you don't want one. And that's okay too. But there's too many ways to get a home for you to want one and not have it. You see my information on here. Give me a call, send me an email, we'll talk about it.
Absolutely, bruh. As always, giving us the game. Definitely appreciate you coming through, my man. And we're definitely gonna chop it up some more. I'm going to ask that you as you are progressing in your knowledge and skill within your craft, come back and kick it with us a little bit more. So
hey man, I'm here anytime you need me, brother. You already know. So
I appreciate you. So folks, everybody that's with me, as always, reach out. You've got the information for everybody who's coming on to the Platinum Guest Series. Use this to your benefit. Use this to your benefit. I'm going to put your number and your contact information up again. I'm gonna put it up for a full minute. That way everybody sees this. You've got time to write this information down. It's worth putting it in your phone, in your tablet, your iPad, scribbling it on some paper. Damn it, go get some lipstick and write it on your mirror. Listen, folks, we need to get this started. Reach out to Dez, holler at him. That way you can be a homeowner. That's the goal. Home ownership. Don't be afraid of credit. Don't be afraid of the things that you might have to work on to get to where you want to be. This is another avenue. Again, this is Financial Literacy Month, people. And that's what we're trying to do. We're trying to get you to a position of ownership, of financial literacy, of being able to breathe, that because you don't have to worry about rent going up next month. You got it now. You got your mortgage. And it's something that you're building as an asset to leave to the future. And that's what it's all about. So again, my brother, I absolutely appreciate you taking the time out and hopping on, and we'll be tapping back in with you as soon as we can. So as always, good people, thank y'all for coming out, hanging out with us. You could have been anywhere else in the world, but you decided to listen to us, and I appreciate that. Thank y'all for listening and sticking by. God bless, and we'll talk to y'all later.
All right now.